This meeting is being recorded.
Amazing, thank you. Bueno, let's jump right in it just because we're like so far behind because of technical difficulties. Thank you so much, Vinny, for being here with us. And I really appreciate you taking the time today, honestly.
Absolutely.
All right, let's jump on it.
All right, FHA. First of all, can you hear me good?
Yes.
Perfect. All right, so FHA. Fun. The reason why I think this is a great topic is because we're getting into a market that I think we're going to start seeing a lot more buyers out there who are interested in FHA. And what I really like to do is not just have per se an agenda, but I want to go over some specific things, but I also want to open it up to anybody who has questions out there. So if you have any questions or if anything comes up, please, unmute yourself and ask the question or type something in the meeting chat, and then I'll be able to answer it for you. So really quick before I go into FHA, my name is Vincent Rodriguez. I'm with Highlands Residential Mortgage. I've been in the mortgage industry now 20 years. I'm dating myself, but I've been doing this for a long time. I've never gotten out of the business, and my passion is this business. So I love helping people. I love working with clients and making sure that they're able to get financing for their home. And this is what I'm good at. So I have a team at Highlands Residential Mortgage where it's a team of 2 other people. So the good thing is that when you do business with me, you get a whole package. And we always make sure to keep you at the forefront and your clients at the forefront. So later on, I'll give my information. I'm sure Jenny will give you my information also. And I'd love the opportunity to be able to work with all of you because we're coming into a fun market. So with that, FHA. So FHA is the Federal Housing Authority or Federal Housing Administration. And there are a lot of, I guess if you want to call it myths about FHA and what they entail. So one of the first myths that people think when they hear FHA is it's only for first-time home buyers, right? The truth of the matter is FHA is for anybody who wants to purchase a home. They do not have to be a first-time home buyer, okay? And FHA is a government-backed loan. So it's backed by our federal government of the United States and by HUD, which is the Housing of Urban Development. So FHA loans are not only for first-time home buyers, they're open to anybody, whether they are a U.S. citizen, a permanent resident, or even a non-permanent resident. They do not, we cannot do FHA loans for foreign nationals or for certain, if you want to call it, residency types. However, as long as they're here, and I say this, respectfully, as long as they're here legally, right? Even if they have a work permit, right? Or if they are in between certain areas of getting themselves. María, ¿puede presionar mute? I think you can mute her on your end, Jenny. I don't know. All right. So as long as they're here legally, we can go ahead and get them financed using FHA. And we'll get them taken care of.
Que tenga buen día. Hasta luego. Bye. Hola, Reylis.
Maybe you can mute her.
Hold on. I don't have the control for that.
Maria.
Okay. We just called her. Yes. Thank you.
You're welcome. All righty. So FHA is not only for first-time home buyers. It is for anybody who really wants to buy a home. So they can. Another thing that people say is, well, if I own a home right now, I can't do another FHA loan. That's also another myth. So if you own a home right now and you wanted to do FHA financing to purchase another home, you are eligible to do that. Okay, you can do that. There are some guidelines that you have to meet in order to do that, but it is possible. So if somebody has, let's say, a home right now and it's a conventional loan and they're moving over 100 miles from their current residence, then we can go ahead and finance their new residence with an FHA loan while they keep the current residence that they own right now. Also, they can have two FHA loans if the same exact scenario applies. So if they live here in Miami and we have an FHA loan, but they're moving to, say, Jacksonville, or they're moving to Orlando or to Tampa, we can do an FHA loan for them on that case because they're moving further away than what they need to be here locally. So just know that the opportunity to get people financed for FHA is still out there, is still available to people. Another important factor for FHA is a lot of people say, well, FHA is more strict on the property, right? I've heard so many people say, well, this house is only eligible for conventional financing. It's not FHA approved. So if there's anything that I want you to take away from is when we're talking about single family homes or lot and block townhomes, condos are not included in this, but single family homes, lot and block townhomes, duplexes, triplexes, and even fourplexes, there is no such thing as not eligible for FHA and eligible for conventional. So I really want to dispel that myth now, because I've heard a lot of listing agents say, well, no, this won't qualify for conventional because the roof is messed up. Well, the truth of the matter is, if the roof is messed up and it's visible to an appraiser, they're not going to be able to finance it using conventional financing either. So that's an important myth that everybody needs to be aware of out there, is that if there's any issues with the property that are visible to an appraiser, it's going to be a challenge conventional as well as FHA. So FHA doesn't have any extra layers that are more difficult for for a property to be approved at. There are a couple things that an FHA appraiser is required to do that's different from conventional, but it doesn't really make or break a deal. Number one is that the appraiser does have to certify that the water is running in the property. And number two, they have to go up into the attic and take a picture of the crawl space in the attic and all of that. That's two. And then lastly, they just need to make sure that all the light covers and the light switches have the covers on top of them. But they need to do that on conventional as well. So we have to make sure that all the plugs and all the light switches have their face plates properly put on there. Those are the only three things that will really affect, if you will, an FHA appraisal that you may or may not see on a conventional appraisal. But either way, the bottom line is, when it comes to value, when it comes to condition of the property, or anything of that sort, conventional and FHA appraisers use the same exact methodology. They're not told that on FHA loans they have to be more conservative, or they have to be more conservative with the value. I do want to let you know, as a lender who's been doing this for 20 years, appraisers use the same exact approach for FHA and conventional. The only difference is, like I said, they have to make sure that the water is running and that the attic, they take a picture of the attic. So I know
Let
I'm
me
going
ask you
on.
something. Sorry. So is it also a myth that they have to do 2 inspections right before closing as well?
I've never heard that. So yeah, that's a myth. That's
Okay, so it's
definitely a
only
myth.
the 1 inspection and that's it. Is it usually the same amount of closing time, or is it a lengthier process to
That's a
close?
great question. So that depends on the lender, right? So everything that we're going to talk about here today is going to be specific to Highlands Residential and the way that we do business and the way that my team does business. I can close an FHA loan as quick as I can close a conventional loan. I've closed FHA loans in as little as 2 weeks. So it's not a lengthier process. If you're dealing with a loan officer and a team who really knows how to structure a loan and what's needed and knows the guidelines, we can close FHA loans just as quick as our conventional loans without a problem. So that's a good question. So typically, The only reason why you might see somebody ask for a little bit more time for an FHA approval is maybe because there are some behind the scenes things that took place. For instance, let's say the property that they're buying already had an FHA case number assigned to it. Sometimes, it might take some time to transfer an FHA case number or something of that sort. Or let's say there's an appraisal attached to it from a previous lender, which is another thing that I want to go ahead and talk about. But if there's an appraisal attached to it from a previous lender and our buyer now wants to still use that appraisal, it may take time for it to transfer over. So those are a few things that might, cause a little bit of a delay. But all in all, we should be able to get FHA loans closed relatively quick. Okay. Let's touch base on the appraisals, right? So a lot of listing agents I hear them say, well, I really don't want to go FHA because of the appraisal, if it appraises low, then it's stuck to the property. So let's dispel a couple of myths that have to do with that. So number one, yes, if an FHA appraisal is done on a property, it is stuck or attached to that property for 4 months, 120 days. Okay. Some people are saying 6 months. It's not 6 months. It's 120 days. Okay. So 4 months. All right. So if you're a listing agent and you take a contract from a buyer who is using an FHA loan and they do an appraisal, and let's say the appraisal comes in $20,000 under value, right? That appraisal will attach itself to that property, right? For 4 months. However, that doesn't mean that the new buyer, let's say a new buyer comes in and wants to do FHA, right? That new buyer has the right to have a new appraisal done. Okay. And the lender who is doing the financing for that new buyer has the right to have a due diligence and say, hey, you know what? We reviewed that appraisal. We don't like that appraisal. Also, there are 1 or 2 comps that closed after that appraisal was completed that might help the value. So we'd like to go ahead and pay for our own FHA or our own updated FHA appraisal. So please know that as a listing agent, when you're out there and you're getting afraid of accepting an FHA loan, don't be afraid because of the appraisal, because if it does come in low, then that doesn't necessarily mean that the next buyer who comes through is going to have to use that appraisal. Okay. But that's the main thing that I hear about listing agents about, oh no, I don't want to do it because I don't want to, I'm afraid that it'll come in low. The truth of the matter is that if they're afraid it's going to come in low, and I say this respectfully, is if it's going to come in low, it's probably because either the seller has convinced you to overprice the property, or you know that the property is overpriced. So it's going to come in low, whether it's FHA, VA, or conventional. And trust me, you can overcome the whole thing or the whole worry about the FHA appraisal being attached to the property for 4 months, because as the listing agent, you can provide documentation that can warrant a new appraisal to be done. So don't worry about accepting offers for FHA, because nowadays, believe it or not, a lot of FHA buyers are more qualified than conventional buyers, as crazy as that sounds. And I can tell you that because I'm doing a lot of FHA, I'm doing a lot of VA financing, and the debt to income ratios on FHA loans are a lot more flexible as compared to conventional loans. So, does anybody have any questions about appraisals, condition of property, or inspections like Jenny asked, or anything?
I think I actually just have a comment on that. I mean, when you're browsing through the MLS, a lot of the properties literally do not have the option of the FHA. So I think at that point, you're limiting your audience with the property, because if you do not give that option out, then automatically, just to throw a number out there, 50% of your buyers are going to be discarded because you're not giving them that option.
Yeah, that's a great point. I mean, if you see that it's a condo, so let's touch base really quick on condos and FHA. Does everybody know how to look up approved condos for FHA for HUD on the HUD website? If not, I'm gonna go ahead and in the chat, I'm sorry that I'm looking this way, is just that I'm gonna go ahead and put a link where you're gonna go to look up HUD approved condos. So I just put it in the link. That's the link. Keep it on your favorites. That's where you're gonna go to look up HUD approved condos. And what I would do is you once you go onto the link, you can go into the county, right? So let me see if I'm able to share my screen here. So yes, I am. Okay, so here's where you would come. You would put in here the county is Miami-Dade, right? And we're going to leave everything else blank except for status. On status, you're going to click approved because you want to see where in Miami-Dade there are approved FHA condos. Once you have that done, you click on send, and here are all the approved condos in the entire Miami-Dade County that are approved for FHA financing. So as you can see, all of these expire in 2025. One of them expires in 2024, which is Key Colony. Another one expires in 2024, but there's not a lot of condos that are FHA approved. So we're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So there's 11 condo projects in all of Miami-Dade that are approved for FHA financing. Okay.
And what makes them not be approved, or what makes them go through this,
Good
make
question.
the list?
So, that's a good question. Let me just finish off with this one, but that's an amazing question, and I'm gonna tell you. So this here, this is where you're gonna want to look at. The good news about this is that if it's on this list as already a HUD approved and FHA approved condo, and you find somebody who's buying or who wants to buy in one of these projects, since it's already approved by HUD, then Fannie Mae and Freddie Mac also honor the approval. So they wouldn't need to go through the condo approval in the event that they want to purchase a property as a conventional financing. So here's where you can find all the condo list, and then all you got to do is you can change it here to Broward County if you wanted to, and click send, and it shows you all of them here that are approved for FHA financing in Broward County, which is a lot less than in Dade. And look, if you look at it here, 1, 2, 3, 4 of them are in Emerald Hills. So realistically, in Broward County, there's only 1, 2, 3, 4, 5, 6 approved condos in all of Broward County that are FHA approved. So I'm going to stop sharing that, and I wanted you to make sure that you save that with there. So let me ask your question. Let me answer your quick question, Jenny, regarding what makes it approved or what doesn't make it approved. FHA has very strict guidelines when it comes to approving them for their condos. So most condos have what's called the right of first refusal, right? And what right of first refusal means is that the condo, you know how they always say when you have a buyer under contract in a condo that they have to submit an application for a condo approval, right? So they submit that with their HOA. The HOA can literally discriminate against them and say they might have great credit, they may have all these things, but nope, we're not going to sell it to Jenny because she's wearing glasses. And they, they can, if it's written in their bylaws that they can do that, then there's nothing the buyer can really do about it. So HUD doesn't like the idea that an HOA can legally discriminate against a buyer. So if they're able to legally discriminate against a buyer, it doesn't make the project eligible for FHA financing. So the main thing that you're going to see when a condo is not eligible for FHA financing, it's because they have that right of first refusal written in their declarations and their condo docs. So that's one of the main things that doesn't make it approved. And then anything else that doesn't make it approved are the same things that doesn't make something approved on condo. High investor concentration, right? So if there's a lot of investor concentration in an FHA approved or in an FHA building, that can affect it. Single entity ownership, meaning if one investor or one person owns more than 20% of the units in a project, excuse me, that doesn't make it eligible for financing. They don't like that. So we would have to do a condo questionnaire and all of that stuff too. But nonetheless, those are some of the things that do not allow a project to be eligible for FHA financing. Somebody asked a question in the chat. If the buyer will come with 20% down, can FHA still be approved with limited review? That's a great question. So no, the answer to that, Ida, is no. So when it comes to FHA on a conventional, when it comes to FHA financing on a condos and FHA, they don't have a limited review option for FHA. Okay, so whenever you're doing a financing in a condo building, and they want to try to do FHA, there is no limited review. It's always going to be a full review for FHA. And once we gather all those documents, we actually have to upload it into a portal on HUD, and HUD is gonna be the one who's gonna review the documents and make the determination on whether that project is eligible or not. Also, one other, and Ida brings up a very good point here. She asked if somebody wants to put 20% down on FHA. Well, I wanted to also let everybody know that when it comes to FHA loans, you're going to want to make this note, right? You can put as much money down as you want. Okay, FHA, you don't only have to put 3.5% down. I'm working with a borrower right now who, unfortunately, she got a divorce, right? And unfortunately, she had a situation where they had a lot of credit card debt. She was late on her credit cards, and she has, you know, a 592 middle score, right? And she's gonna put 40% down because she's getting proceeds from the divorce, but she needs to buy a home for her and her family. So she's buying a, you know, $500,000 house, putting 40% down, and we have no choice but to go FHA because of her credit score being a 592. Okay, so she's going to get a much better rate with an FHA loan. She's going to have lower private mortgage insurance on the FHA loan, and she's going to have the ability to remove the PMI after paying it for 11 years. So those are important factors that you want to keep in mind. So number one, FHA, you don't only have to put the 3.5% down. You can put as much money down as you want. Number two, regardless of the down payment, this is a very important thing when it comes to FHA. Regardless of the down payment, the buyer will still always pay the monthly mortgage insurance. Okay. My client is putting 40% down. She's still going to pay PMI every single month, and she's going to pay the upfront mortgage insurance premium. Okay. Number three, on an FHA loan, if a buyer is putting 10% or less down, meaning less than 10% down on a down payment, they have to pay the PMI for life. The only way that they can remove PMI on an FHA loan, if they put less than 10% down, is by refinancing into a conventional loan. Okay, so if they bought a house and they put 5% down and they did an FHA loan, and in 4 years they've got 20% equity, they cannot remove the PMI by just calling the lender and saying, hey, I've got 20% equity, remove my PMI. On an FHA loan, that doesn't work. If they put less than 10% down, they have to pay PMI for life, and the only way to remove it is if they refinance. Now, if they put 10% down or more, they are required to pay PMI for 11 years. Okay, so they can keep the loan, and after 11 years, the PMI will automatically fall off, but they will continue to pay PMI for the life of the loan until they actually hit that. Okay, so let me see. Also, if the buyer filed a BK for 2 years discharge, needs to go FHA. Correct. So FHA has a lot more lenient guidelines when it comes to bankruptcies, foreclosure, short sale, and deed in lieu of foreclosure. Okay, so for FHA, if they're doing a Chapter 7 bankruptcy, they only have to wait 2 years in order to qualify for financing. Where conventional, you have to wait 4 years. Okay, for FHA, after you have a foreclosure, you have to wait 4 years. Where on conventional, you have to wait 7 years. And here's the crazy thing that some people may not know, but if a buyer is currently in Chapter 13 bankruptcy, okay, where they're actually paying back a certain amount, they can buy a home while they're actively in Chapter 13 bankruptcy. We just have to confirm that they have been making the payments for at least 12 months to the trustee, and we have to get permission from the court to have them buy a property. and then we have to take the application. They have to meet all the financing guidelines. We have to run it through our automated underwriting system, and they will have to meet the manual underwriting guidelines. But somebody who is actively in a Chapter 13 bankruptcy can still qualify for financing of a home, which is great. So a couple of good points so far. So does anybody have any questions? No? You sure? Ask away or type away.
I'll ask. Okay, what about, all right, so you said that they can only get away from that after 11 years, but is there any restrictions that they can actually do the refinancing at any given point? Do they have to have the loan? They have to hold on to that loan for a year, 2 years, 3 years? What is it?
No. So on an FHA loan, there's no prepayment penalties, so you can refinance out of an FHA loan at any time. So if we bought a home last year and when rates were higher and they were, let's say they have a 7.75 and today they want to refinance and go into a conventional loan and get a lower rate, they can do that without a problem in order to remove the PMI. So that would be no issue whatsoever. The 11-year rule is only if they put 10% down. So if they put 10% down or more, then they do have to pay PMI for at least 11 years. But if they put less than 10% down, they're paying PMI for life on an FHA loan. Yeah. What other questions? Okay. So if no one else has any questions, I want to touch base on one other product or one other feature on an FHA loan that a lot of people aren't really taking advantage of right now is okay, sorry. The one thing that is FHA 203K. I don't know if any of you have heard of an FHA 203K loan, but if you haven't, I think it's a great product to offer buyers who want to buy a home and they're willing to buy a fixer-upper and they want to make repairs. So perfect example, let's say you have a buyer that's gonna buy a home in a lower price point, or in today, go figure, I was gonna say for about $500,000, right? That's a lower price point in today's market, right? $500,000, but they're buying the property and everything's original in the property. The kitchen's original, the windows, everything. An FHA 203K loan allows them to do a rehab of the interior of the home. So they can buy the home and finance kitchen, bathroom, flooring, painting, anything that's cosmetic on the inside of the home. All right. And they will be able to qualify for up to $50,000 in actually in some cases even more, but they can qualify for up to $50,000 in renovations of the home. So let's say you have somebody who's going to buy a $500,000 property, right? But it needs a new kitchen and updated baths and new flooring all throughout the house, right? And by doing those repairs, the house is going to go from being worth $500,000 to $550,000, right? We will lend based off of what's called the ARV, the approved market value, the AMV. So if they are buying the house for 500 and they're going to update the kitchens, 2 bathrooms and flooring and give it nice paint, and based on the appraisal, the appraiser is going to say, okay, the as is value is $500,000, but the improved value is going to be 550,000. We'll lend them up to 96.5% of that 550,000. So they'll be able to roll in the cost of doing all the rehab and all the updates of their home into their new loan. Now, there are some important guidelines to follow for this. First is that unfortunately, because we're in Miami, so I'm gonna say it as it is. Unfortunately, Tío Pepe and Tío Juan Carlos can't do the repairs for them because they're a handyman or they know how to do all the repairs for them. Unfortunately, it doesn't work that way when it comes to the FHA 203K. So they would have to get a general contractor who's licensed, insured, and bonded, right? And that general contractor will give them a bid for all the work. And then we would take that bid, submit it to HUD, and we would upload it into the appraisal. and the appraiser will give the improved value, and then we'll be able to lend based on the improved value of the home. But it has to be a licensed, bonded, and insured general contractor, and we do, meaning us as the lenders and HUD, they do review the background and the work of the general contractor that they're using. So, and the person can't do the work themselves either. So it has to, the only way a person can do their work themselves is if they themselves are a licensed, bonded, and certified general contractor. But outside of that, for this FHA 203K loan, these are great loans that we can help get borrowers into a home. Now, these FHA loans, these take 45 to 60 days to close. And it's not because of getting the borrower qualified, it's everything that goes on in the background that needs to get done, because they do pull, believe it or not, they do pull a business credit report. They want to do due diligence. They need to make sure that the insurance of the contractor is updated and all that. So it's not necessarily underwriting the borrower. They also underwrite the contractor that's performing the work. So I just wanted to throw it out there to let you know that these 203K loans are a very big option. And what about the down payment on the 203K? They can, in some instances, depending on the scenarios, they can put as little as 3.5% to 5% down on the 203K loan. So that's awesome. Does the repairs need to be finished before closing? That's a great question, Ida. No, the repairs do not need to be finished before closing. So the repairs what would end up happening is, they get under contract, and they send the GC over to the house. They give the what's it called, the proposal on everything that needs to be done. Once that's done, they submit it over to us. We do our due diligence. The HUD does their due diligence, and then I believe that they've got 90 days from closing to have all the repairs done. So, and the good news is that the only thing is that the GC who's going to be performing the work, they're going to have to be willing to start doing the work knowing that money is going to be held in an escrow account, and that there is going to be a disbursement schedule where the GC is going to be able to get paid. Yep. And hold the money for the repairs and escrow. Yes, correct. So they will definitely, you find a GC, and the GC, the good thing is the GC is going to know that they're going to get paid because the money's going to be held in escrow. So once they close, they can go ahead and start all the work. And those funds, luckily those funds, because of how the loan is set up, those funds can only be dispersed to the general contractor. So the homeowner can't come and say, oh, no, you know what? No, I changed my mind. I want my money back. Give me all the money that's in escrow. The buyer can't do that. Those funds are specifically earmarked for the general contractor. So, yeah. Good question. How many GC estimates are required? So when it comes to a 203K, that's a great question. I recommend, when I've done these before in the past, I always tell the clients to get one general contractor to do all the work. Because when you have one general contractor that's going to do all the work, they only have to do the due diligence on the one general contractor. They don't do the due diligence on the subs. So if you have a general contractor that's going to do the kitchen, the bath, and the plumbing, and the flooring, and everything, then just do that one GC and have them give you a quote for anything. However, if you have one person who's going to do the kitchen, and you've got another GC who's going to do the bathrooms, and then you have another person who's going to do the flooring, that's 3 different people, and we have to do due diligence on 3 different people. So keep it simple and use one GC to do the entire work, as opposed to having several different GCs doing different parts of the work on the home. That was a good question, Ida. Anybody else have anything else? Any other questions? Nothing. I saw you unmute, Jenny. You're muted.
There you go. It's like so slow. All right. So back to that GC question. So everything is submitted through that one GC. Do you have to use that GC once you close?
Yep.
Okay.
Yep. That's a good question, because a lot of people also, this is Miami. So, yeah, hey, look, Theo Weber, go ahead and say it's going to cost me $50,000. But really, if you can do it for me for 35, I'm going to take the extra 15 grand. Doesn't work that way. There's a whole entire, you know, analysis that goes through with it. So the GC that provides the estimate is the GC that has to be used, because the title company can only disperse to that GC. They can't disperse to anybody else.
Okay, cool. Okay, thank you.
Yep.
This is
And
awesome.
they
Thank you.
and they do a cushion. I think they do a 10%. So if they say that it's going to cost $35,000, they'll escrow an additional 10% overage. So they'll escrow 35,000 plus the 10%. So that's another 3,500. So like 38,500 for any possible overage that might take place. That'll be held in escrow. And if for some reason they don't use that 10%, that money, whatever's left, will go back to the borrower.
Now, all of this is based and approved numbers based on the after repair value, correct?
Yep. Yes, ma'am.
Okay, so I mean, I know that we're talking about FHA, but would the more or less the same stuff kind of sort of apply to the VA, or is that too much of a far?
Yep, same thing. Any of the rehab programs that we have, whether it's VA, FHA, or conventional, they all follow the same protocol, which is the same thing. Now I mean, I know we're talking FHA like you said, but we do have some conventional programs out there that allow for even more in-depth improvements. If somebody wants to do an addition, if somebody wants to add a pool, excuse me, we have the ability to do that as well. But the challenge specifically with a pool, the challenge with that is that, you know, the repairs typically have to be done within 90 days. They might allow for one 30-day extension. So you're looking at 90 to 120 days. And right now, from what I hear out there, getting a pool done in 90 days is pretty tough. But aside from that, everything else is, I think, pretty doable.
Amazing.
The buyer
Thank you.
needs to start mortgage payment no matter if the property is repaired and functional, right? Correct. That is 100% right. So once they close, they're closing on that property. So they're going to still be making the mortgage payment regardless of whether the repairs have started and all of that. So or whether the repairs are completed. So they're going to be paying their mortgage during this whole process. So trust me, a buyer is going to be on top of that GC to make sure that the repairs are done timely, because that buyer is going to want to move into the home. Ida's got some good questions.
Yes, thank you, Ida. Amazing. Thank you so much, Vince. So anybody else has any questions? I know we started late, but I don't want to hold you up.
No, I mean, I'm good. I'm all yours. I had it planned anyway, so I'm all yours.
Thank you.
But if anybody has questions, you know, ask away. I can talk about anything pretty much. Jenny knows I like to talk about mortgage. I'm a numbers nerd. I'm a mortgage nerd. I'm a real estate nerd. So whatever you need, I'm here. I'd love the opportunity to work with all of you, and, you know, give me an opportunity and my team an opportunity to work with your next buyer. I mean, there's a lot of opportunity out there. There's a lot of buyers coming out, and there's a lot of things going on in the market that if you're not teamed up with the right team, the right lender, the right title company, you know, you can put a buyer at a lot of risk right now. So team up with good people and that have your back and that know what's going on, because we're coming into a pretty fun market right now. My phone number is 786-208-8112. I'm putting it in the chat also. 208-8112, and my email address is vrodriguez there. vrodriguez@highlandsmortgage.com. Oh, and my website, I'll put it there too.
And don't forget your Monday minute.
Yes. And so every single Monday at 10 a.m., every single Monday, I do what's called the Monday Mortgage Minute. I start at 10 a.m. I try not to go past 10:15 in the morning. Jenny's attended several times. And I just give a quick blurb about what's going on in the market, what to expect in the upcoming market, and what happened the week before and what's expected to happen during the week. And then I give a little bit of whenever I find something interesting, I might share an article or I might share some insight on the market or what's going on. So every Monday I do this for real estate agents. It is on Zoom. And I will actually let me include the Zoom link here because it's the same Zoom link every Monday at 10 a.m. Let me get it for you, and I will put it in the chat as well. And also, Jenny, if you can give me a list of everybody that's on here, I will be happy to send an email to everybody as well. That way you can go ahead and see, be part of my email list, so that when I do my Monday Mortgage Minutes, you'll be able to be included. I usually send out email reminders and text reminders as well.
Okay, perfect. I'm also going to put these links on our club chat so that everyone can have it accessible as well.
Yes, please. That would be awesome.
Monday Mortgage. I'm doing it now as we speak.
Yep, Monday Mortgage Minute. That is me. And if anybody has questions, if you need anything, also one of the things that we are very well known for is saving deals. So if you ever have a buyer that's under contract and their financing is blowing up, and if let's say they love the house and they're like, oh my God, I love the house, but my lender says I can't get anything done, call me. You'd be surprised. We've been able to save a lot of deals for buyers and get them into the home. So before they cancel out of a contract or anything, give me a call. I'd love the opportunity to take a look at anything that might be blowing up and try to save the deal for not only you, but for the buyer as well. So to make everybody happy.
Are you able to step in if we feel like somebody's not doing their job? Are you able to step in and continue the contract, or how does that work?
Yeah, we are able to do that, assuming that the buyer is okay with canceling their loan with the other person. Yeah, absolutely. Okay. And then we just submit it as a rush, and we request to transfer an appraisal. We request to do all that stuff. And then we get the appraisal transferred, and that way they don't have to pay for a second one. Now, there are times that the other lender might be angry that, hey, but what do you mean you're leaving me, or something like that. And the other lender may not cooperate and may not want to release the appraisal. In the event that they don't want to release the appraisal, we'll have to do a second appraisal for them. But nonetheless, yes, absolutely, I'm able to step in and take over.
Can you give us an example of, I feel like that would be one of those harsh situations, but what would be something like that? Like, what would cause me to change lenders at the last minute?
That's a good question. So, man, I'm not a person, I've been doing this for a long time, like Jenny, and I'm not a person who wants to take any money out of anybody's pocket, right? Because I'm sure the other lender, if there is another lender that's dropping the ball, I'm sure that at some point they were invested, they did a good job. We hope they did a good job, right? But there's several instances where I've had to step in. For instance, I had to step in once where a lender they were going to deny a file for an income that the buyer received, but they just didn't feel comfortable with, and they needed that income in order to be able to qualify. I was able to use that income because our underwriter interpreted it a different way, and we were able to use it. And rather than have them be denied with the other lender, we stepped in and we closed the deal. There's that. I've had a lender, I hate to say this, but I've had a lender tell people, yeah, we're under contract, and 3 weeks have passed by and nothing's been done. An appraisal wasn't done, title hasn't been done, nothing, and the lender was nowhere to be found. And the buyer needed to close in 2 weeks, and nothing's been done. So I've had to correct, exactly, Ida, and they don't answer the phone and they disappear. I've had to come in and take over and close a loan in 2 weeks. where if they would have referred them to me from the beginning, I would have had the full 5 weeks, but I have to close it in 2 weeks. So there's that. Believe it or not, I hate to say it, but interest rates, right? Sometimes a buyer locked in an interest rate when the market was higher and the market came down. And unfortunately, once your interest rate is locked, you can't really unlock the rate and get the lower rate if the market goes down. So sometimes buyers want the lower interest rate, and when that happens, I've been able to offer them lower interest rates when they've been locked at a higher rate with another lender. And then the most common one that I'm seeing here is any buyers who are using an online lender or a big bank. You know, I'm saving a ton of deals from Rocket Mortgage right now, a ton. Because Rocket Mortgage, they just, you know, they're a good company, they're big, but they're a marketing company who does mortgages. They're not that's what I say. They're not necessarily a mortgage company, even though they say they are. They're in the marketing business. They do a great job marketing, but I save a lot of loans from the online lenders because they don't know the local market. They qualified a borrower with the wrong taxes, or they didn't disclose the proper amount of points, or they might have disclosed that they're going to pay too many points and the borrower didn't know these things. So there's a lot of loans that I'm saving right now for borrowers who just weren't educated throughout the process. So yeah.
Great. Thank you.
Yeah.
Well, guys, thank you so much. I shared all of Vincent, all of his information on our chat. I put also the Monday Mortgage Minute. I was getting confused. Monday Mortgage Minute website, or the link. I also put that on the chat. So if you guys want to reach out to Vinny at any point, please do so directly. He is amazing. Thank you. Thank you for your time today. Anybody else before we say bye?
I'm here.
Thank
you.
you.
Thank you so much for the opportunity. You know, you can always count on me. I love being able to help out.
I appreciate it. Thank you, Jorge, for sharing your Zoom with us.
A usted, gracias.
Gracias, Jorge.
Bueno.
All right, everybody.
Ciao. Bye, guys.
Thank you. Have a good one. Take care.
Bye.